If you are collecting Social Security benefits before reaching your full retirement age and you are also working, there is a rule that could be quietly reducing your monthly check right now, and most people who are affected by it either do not know about it, do not fully understand how it works, or are making costly financial decisions based on a misunderstanding of what it actually means for them. That rule is called the Social Security Earnings Test, and it governs how much money you can earn from work before the Social Security Administration starts withholding a portion of your benefits. Here is the update that makes this so important right now. The earnings limit under the test has been increased to $24,480 per year, and understanding exactly how this threshold works, who it applies to, and how to plan around it could save you from making a financial mistake that costs you hundreds or even thousands of dollars in benefits you could have kept. This is not a small or technical adjustment. For millions of Americans who are working and collecting Social Security at the same time, this threshold is the number that determines how much of their benefit they actually take home. Stay with us, because by the end of this video, you will understand this rule completely, and you will have a clear picture of how it affects your specific situation. Hello, everyone, and welcome back to U.S. Benefits Update. I am your host, Claire Hollister, and thank you so much for being here today. This channel is dedicated to making sure that every American who receives or is planning to receive Social Security benefits has access to the clearest and most complete information about the rules that govern those benefits and the updates that change what they receive. The Social Security Earnings Test is one of the most misunderstood rules in the entire Social Security system, and the confusion around it leads people to make suboptimal financial decisions every single day. Today, we are going to clear up all of that confusion with plain language and concrete examples. And we are going to make sure you leave this video knowing exactly where you stand and exactly what you can do to make the most informed decisions about working and collecting Social Security at the same time. Let us get right into it. Here is the update that every working Social Security beneficiary needs to know. The Social Security Administration has increased the annual earnings limit under the Retirement Earnings Test to $24,480 for the current benefit year. This means that if you are collecting Social Security retirement benefits before reaching your full retirement age and you are also earning income from work, you can earn up to $24,480 during the year without having any of your Social Security benefit withheld under the earnings test. Once your earnings from work exceed that threshold, the Social Security Administration withholds $1 in benefits for every $2 you earn above the limit. This increase in the earnings threshold is a meaningful improvement for working Social Security recipients because a higher threshold means more people can work more without triggering benefit withholding. And those who do exceed the threshold will reach it at a higher income level than in previous years. The earnings limit is adjusted annually to reflect changes in national average wages, and the increase to $24,480 reflects the upward trajectory of wage levels across the economy. Understanding this new threshold and how it applies to your specific earnings situation is essential for anyone who is working while collecting early Social Security benefits. To understand why the earnings test exists and why it works the way it does, we need to look at the history and the policy rationale behind this rule, because understanding where it came from helps clarify how to think about it and how to plan around it effectively. The Social Security Earnings Test has been a feature of the Social Security system since nearly the beginning, and it has been the subject of significant debate, modification, and reform over the decades. The original rationale for the earnings test was rooted in the foundational concept of Social Security retirement benefits as income replacement for people who have retired from work. When Social Security was established in 1935, the benefits were specifically designed as a replacement for earnings that a worker was no longer receiving because they had retired. The logic was that if someone was still actively earning income from employment, they had not yet retired in the meaningful sense of the word, and therefore did not yet need the income replacement function that Social Security was designed to provide. The earnings test was the mechanism through which the system enforced this retirement-linked principle by reducing benefits for recipients who were earning income above a certain threshold from continued employment. Over the decades, the rules around the earnings test have been modified significantly. One of the most important changes was the complete elimination of the earnings test for people who have reached full retirement age. Since 2000, there is no earnings test at all for Social Security recipients who have reached their full retirement age, meaning that people at full retirement age and beyond can earn any amount from work without any reduction in their Social Security benefits. This was a major policy change that reflected the evolving view that the earnings test as applied to older workers was discouraging continued workforce participation and was arguably unfair to workers who had paid into the system for decades and who wanted to continue working. The earnings test that remains today applies specifically and only to Social Security recipients who have claimed benefits before reaching their full retirement age. Full retirement age is currently 67 for anyone born in 1960 or later, and it is 66 and some months for people born in the years between 1955 and 1959. If you claimed Social Security benefits at 62, 63, 64, 65, or 66 and you are still working, you're in the group for whom the earnings test is relevant. For people who claimed at the earliest possible age of 62 and who are still several years away from full retirement age, the earnings test can affect their benefits for multiple years, making it a very important planning consideration. Let us now get into the specific mechanics of how the earnings test works, because the details of the calculation are essential for anyone who is trying to understand how their specific work income will affect their benefits. The formula is straightforward once you understand it, but it has some nuances that catch people off guard. The basic rule is that for every $2 you earn above the $24,480 annual threshold, the Social Security Administration withholds $1 in benefits. So the withholding rate is 50% of excess earnings. Let us walk through a concrete example to make this real. Suppose you are collecting Social Security benefits of $1,800 per month, which works out to $21,600 per year, and you also earn $30,000 per year from a part-time job. Your earnings exceed the threshold by $5,520, which is $30,000 minus $24,480. Half of that excess, which is $2,760, would be withheld from your Social Security benefits over the course of the year. That means instead of receiving $21,600 in benefits for the year, you would receive $18,840, a reduction of $2,760. There is a separate and more generous threshold that applies to people who will reach full retirement age during the current calendar year, meaning people who are in the year they turn their full retirement age. For this group, the earnings threshold is significantly higher, approximately 3 times higher than the standard threshold, and the withholding rate is $1 withheld for every $3 earned above that higher threshold, rather than 1 for every 2. This transitional rule recognizes that in the year you reach full retirement age, you are close to crossing out of the earnings test entirely. And it allows your earnings and your benefits to begin converging without the full impact of the standard withholding formula. One of the most important things to understand about the Social Security earnings test withholding is that the withheld benefits are not simply taken away and lost forever. This is probably the single biggest misconception about the earnings test, and it causes enormous unnecessary stress for people who assume that every dollar withheld is a dollar permanently gone. In fact, when you reach full retirement age, the Social Security Administration recalculates your monthly benefit to give you credit for the months during which benefits were fully or partially withheld due to the earnings test. Your benefit is permanently increased at full retirement age to account for those withheld months, and over time, assuming you live a normal life expectancy, you will generally receive back through the higher benefit most or all of the benefits that were withheld during the pre-retirement age period. Let us be very specific about who the earnings test applies to and who is exempt, because precision here prevents a great deal of confusion. The earnings test applies to you if you are receiving Social Security retirement benefits and you have not yet reached your full retirement age and you have earnings from work. All 3 of those conditions must be present. If you have already reached full retirement age, the earnings test does not apply to you at all regardless of how much you earn. If you are not working and earning income from employment or self-employment, the earnings test does not affect you even if you are receiving benefits before full retirement age. The type of income that counts under the earnings test is wages from employment and net earnings from self-employment. This is an important and often misunderstood distinction. Income from investments, rental properties, pensions, annuities, interest, dividends, and capital gains does not count as earnings for purposes of the earnings test. Only income that you actively earn through work counts. This means that a retired person who collects Social Security and has substantial investment income can receive any amount of that investment income without it affecting their benefits under the earnings test. The test is specifically about earnings from work, not about income generally. For people who are self-employed, the earnings that count under the test are net earnings from self-employment, meaning your business income after deducting allowable business expenses. The calculation of net self-employment earnings for earnings test purposes follows the same principles as the calculation of self-employment income for tax purposes. So people who are self-employed should be working with a tax professional who can help them accurately calculate their net earnings and understand how they compare to the threshold. Now let us talk about the financial planning implications of the earnings test and how understanding the new $24,480 threshold can help you make better decisions about how much to work, when to claim benefits, and how to optimize your overall retirement income picture. This is where the practical value of understanding this rule becomes most concrete. For someone who is considering claiming Social Security early, before full retirement age, and who plans to continue working, the earnings test is one of the most important financial factors in that decision. Claiming early results in a permanently reduced benefit, and claiming early while earning above the threshold means that some of those already reduced benefits will be withheld, which can create a situation where the financial benefit of claiming early is much smaller than it initially appears. Running the numbers carefully, ideally with the help of a financial planner or Social Security claiming strategist, can reveal whether claiming early makes financial sense given your specific earning plans. For people who are already receiving benefits before full retirement age and who are in a position to adjust their work hours or earnings, understanding the threshold allows for thoughtful planning around the $24,480 limit. Some people find it financially advantageous to structure their work hours or income so that their earnings stay at or below the threshold, allowing them to collect their full benefit without any withholding. Others find that working more, even above the threshold, makes sense overall because the withheld benefits will be returned through a higher benefit at full retirement age. The right answer depends on individual circumstances, including health, financial needs, tax situation, and expectations about longevity. The interaction between the earnings test and income taxes is another dimension of the picture that deserves attention. Social Security benefits may be subject to federal income tax if your combined income, which includes adjusted gross income plus non-taxable interest plus half of your Social Security benefit, exceeds certain thresholds. Adding work income to your Social Security benefit can push your combined income above the tax thresholds, resulting in a situation where you are both having benefits withheld under the earnings test and paying income tax on a portion of the benefits you do receive. Understanding this interaction is important for anyone who is working and collecting Social Security simultaneously, and it reinforces the value of working with a tax or financial professional who can model the complete financial picture. The $24,480 earnings threshold is in effect for the current benefit year, meaning it applies to earnings you receive during this calendar year. The Social Security Administration adjusts this threshold annually based on changes in national average wages, and the threshold for each year is announced by the SSA typically in the fall of the preceding year. If you are planning ahead for future years, you can generally expect the threshold to continue adjusting upward as long as national wage levels continue to rise. But the specific amount for any given year should be confirmed directly through the Social Security Administration's website at ssa.gov, which publishes the current and recent thresholds clearly. For people who are currently receiving benefits and are tracking their earnings against the threshold in real time, it is important to know that the earnings test is applied on an annual basis rather than a month-by-month basis for most purposes. However, the Social Security Administration does use an estimated monthly withholding approach during the year based on your expected earnings, and adjustments are made at the end of the year when your actual earnings are known. If your earnings turn out to be lower than initially projected, you may receive a refund of overwithheld benefits. If they are higher than projected, additional adjustments will be made. Staying in communication with the Social Security Administration about significant changes in your work situation during the year can help minimize the administrative complexity of these year-end adjustments. Financial planners and Social Security claiming strategists who work with pre-retirement age benefit recipients have been providing important guidance on how to think about the $24,480 threshold and the earnings test more broadly. And their perspectives illuminate both the opportunities and the pitfalls that this rule creates for working Social Security recipients. Certified financial planners who specialize in Social Security optimization consistently emphasize the importance of the full understanding that withheld benefits are not lost benefits. They report that the fear of having benefits withheld under the earnings test leads some people to turn down work opportunities or to reduce their hours unnecessarily, when in reality the withholding is temporary and is offset by a higher benefit at full retirement age. These planners encourage their clients to look at the lifetime benefit picture rather than focusing narrowly on the year-by-year impact of the earnings test, and they note that for many people in good health, working more and accepting temporary withholding while receiving a higher permanent benefit from full retirement age onward is the financially superior strategy. AARP and Social Security advocacy organizations have highlighted the earnings test as an area where better public education and outreach is needed, because the misunderstanding of this rule is widespread and the financial consequences of that misunderstanding are significant. These organizations have published guides and calculators that help people understand their specific situation, and they have advocated for policy changes that would make the earnings test more transparent and more clearly communicated to beneficiaries. The increase in the threshold to $24,480 has been welcomed as a positive step by these organizations, though many continue to argue for further reform or complete elimination of the earnings test for all age groups. Let us look at how the updated earnings threshold is actually affecting real people and real financial situations, because the numbers become most meaningful when they are connected to the lives they affect. Consider a 64-year-old woman who claimed Social Security at 62 because she needed the income after a difficult period in her career. She receives a monthly benefit of $1,400. She recently found a part-time position at a local business that pays $28,000 per year. Under the new $24,480 threshold, her earnings exceed the limit by $3,520, and half of that, which is $1,760, will be withheld from her annual benefits. This means she will receive about $147 less per month on average during the year. Understanding this calculation helps her plan her budget accurately and also helps her understand that at full retirement age, her monthly benefit will be permanently increased to account for those withheld months. Or consider a 65-year-old man who is approaching his full retirement age of 67 and is still working full-time, earning $50,000 per year. He claimed Social Security at 63 because he thought it would supplement his work income. Under the earnings test, his earnings exceed the $24,480 threshold by $25,520, and half of that, which is $12,760, will be withheld from his annual benefits. In his case, the withheld amount exceeds his total annual benefit, meaning his entire benefit is being withheld, and he is essentially not receiving any Social Security payment during the year. When he reaches full retirement age at 67, his benefit will be recalculated to credit him for the months of complete withholding, resulting in a meaningfully higher monthly benefit for the rest of his retirement. For families where one spouse is receiving Social Security and the other is working, the earnings test applies only to the earnings of the Social Security recipient, not to the earnings of the working spouse. This is an important clarification that sometimes confuses families who assume that all household income counts against the threshold. If you are collecting Social Security and your spouse is working and earning significant income, only your own earnings from work are counted in the earnings test calculation, not your spouse's. Let us close with a complete and clear summary of everything we have covered today. The Social Security earnings test applies to people who are receiving Social Security retirement benefits before reaching their full retirement age and who are also earning income from work. The annual earnings threshold has been updated to $24,480, meaning you can earn up to this amount from work without any reduction in your Social Security benefit. For every $2 you earn above this threshold, $1 in benefits is withheld by the Social Security Administration. Only income from work, meaning wages and net self-employment earnings, counts toward the threshold. Investment income, rental income, pensions, and other non-work income does not count. Benefits withheld under the earnings test are not permanently lost. When you reach full retirement age, your monthly benefit is permanently increased to account for the months during which benefits were withheld. The earnings test completely disappears at full retirement age, meaning people at full retirement age and beyond can earn any amount from work with no impact on their Social Security benefits. Understanding this rule and planning around it thoughtfully can significantly improve your overall retirement income outcome. Before we close out today, we want to hear from you. Are you currently working and collecting Social Security before full retirement age? Have you had benefits withheld under the earnings test? Do you have questions about how the $24,480 threshold applies to your specific situation? Drop your questions and your experiences in the comments section below. Our community includes people who have navigated this exact situation and financial professionals who can offer general guidance, and the conversation in our comments is genuinely valuable for everyone watching. If this video helped you understand the Social Security earnings test more clearly, please give it a thumbs up and share it with everyone in your life who is working and collecting Social Security at the same time. Subscribe to U.S. Benefits Update and turn on your notifications so you never miss an important Social Security update. I am Claire Hollister, and thank you so much for watching. We will see you in the next video.